Hey guys, thanks for joining me for this one. In this video, I'm going to go through 4 stocks that I bought today in the stock market. Also going to take a quick look at my portfolio if I was up or down on the day. But before getting into this one, if you like this type of content, be sure to like this video. It really helps out with the YouTube algorithm. And also, if you haven't yet, would love it if you subscribe to the channel. We're growing fast, so it'd be great to have you on board. Okay, so in my portfolio today, just going through here, on the Canadian side, I was down about $500. On the US side, I was down about $300, it looks like. So overall, it looks like about $800 down total, a bit more in Canadian dollars. So not a good day, but the overall stock market was down today. Just going through my portfolio a bit and the stocks that I bought here today. The first stock I bought on the Canadian side was actually an ETF. I bought some more ZWC. I think I got it at about $17.90 a share. This is a high income covered call dividend ETF that holds high yielding Canadian securities. Think stocks like Bell, Enbridge, Pembina, other energy stocks, bank stocks, stuff like that. And this one just pays a great dividend yield, almost 7%, get a monthly payout from it. I do own a bit more of it in my portfolio. It's been about flat, slightly down, but remember, this is just the stock price. I am still getting that 0.5, 0.6% dividend every single month. That adds up to about 7% a year. So I just have a bunch of cash on the sidelines, not currently in my Wealthsimple account. Thought it would be a good idea to start investing a bit more cash, even though the market's been going up here. It's really hard to just time the market. It could keep going up, it could go down. So just decided to deploy some cash today and thought this would be a good place to at least start getting more and more income on a monthly basis. So BMO Canadian High Dividend Covered Call ETF is the first stock that I bought here today. It was a pretty small buy. I think I bought just like 10 shares or so, but thought that was, not a bad place to make money, given I'll at least be getting the dividend from this one. This is a stock that I like having in my portfolio. I get a nice monthly dividend from it that I can redeploy into other stocks or hold it as cash, whatever I decide that given month. But it's definitely one, and especially when we talk about covered calls overall, that I try to fine tune or right size rather, and not make too big of a position in my portfolio, just because your upside long term is capped, since you're selling that upside for monthly premiums that you get paid in the higher distributions. So this is one that I like having. Don't mind if I build the position a bit more, especially as my overall portfolio goes up, but definitely not one I'm looking to like double in size or anything like that. Going on to the second stock I bought here today, I actually bought a REIT. So I bought more shares of rei.un Real Estate Investment Trust. This is primarily a retail REIT, but they do have some exposure to residential, and then also just like multi-purpose buildings and office space as well. This company makes about $1.70 per share in funds from operations. So here today, it's trading at about 13 times earnings, give or take, let's call it, and they're paying a 4.8% dividend yield. Now, I think lots of investors get scared when they see retail and retail real estate, but this company's probably one of the best managed REITs that I can find. They have a relatively low, manageable debt situation, let's call it. Very prudent capital allocation strategy. They have some room left on their payout ratio to invest back in their business. They're actually buying back shares because they think their units are undervalued. Their net asset values, I think, closer to $26, give or take. So you're getting about a 20% discount versus their fair value on the assets. And not all retail real estate is equal. So obviously, if you're in like secondary or tertiary markets, you may have some risk on retail space, but their vacancy rates are very low. They're almost 100% leased up. That's been ticking up over the last year rather than down. And their rent growth has been strong as well. So even though it's a tough time with a higher interest rate environment, I think just over the next 10, 20, 30 years, a company like rei.un, with the assets they hold and where they hold them, is going to do fine. I'm going to keep getting that dividend of 5% a year. They're going to keep increasing it over time, as they've done the last few years. So this is one that I'm comfortable with. I definitely don't think it's a steal here by any means. If we look back over the last 5 years, I was loading up on this stock even lower than $15. I was buying this at like $13, I feel like, at some points during COVID. So it's a stock that I think is probably fairly valued at 13 times given where interest rates are. But once again, wanted to deploy some capital into the markets. Don't mind getting that 5% dividend yield. If it goes down further in a recessionary scenario, I would add for the long run because this is a stock I think I'll probably be holding for the majority of my life. So those were the two Canadian stocks that I bought here today. Going into the US stocks that I bought here today, I bought two US stocks. The first one was Visa. So Visa is a company that I really wanted to build a bigger position on across my accounts in 2023. I made a video about that at the beginning of the year. Currently have about 30 shares, so a pretty decent sized position in my Wealthsimple portfolio. The only problem with Visa is since I made that video at the beginning of the year when the stock was in this range here, about 207, it's really roared. The stock's currently at 233. So I've just been nibbling in a share here, a share there. I bought one share today of this one. As you can see, the stock went slightly down today, so I said, why not? Maybe a good opportunity to just grab one and go. But this is a stock that I really like. They have essentially a royalty on the global economy. In addition to that, they have a good secular trend of paper cash turning into credit cards, or not credit cards, but cards in general, whether that's debit or credit, and them getting a percentage of those transactions is a very powerful business model. They have very low capex, very low operating expenses. So about 50% of their revenue that they get from all those taps goes straight into net income. They've increased their dividend aggressively, even though it's small. I think it's about 0.7% to start, yeah. But they've increased it double digits every year, so that can grow into something over the long term. They also buy back shares aggressively, so they're really betting on themselves to continue growing into the future. I think this company is going to be well positioned in the next 5 years, 10 years in terms of the payment space. Even on other forms of payment that are catching traction, like Apple Pay, Visa, while they have to give them a piece of their cut, they're still getting a chunk of those transactions when you use your Visa card on your Apple Pay. Just in terms of valuation, this company is going to make about $8 of EPS this year. So trading right around a 30 times earnings multiple. It's definitely rich, but I think if there's a company that deserves it, it's a company that has a lot of tailwinds on their business, a lot of global expansion opportunity, and consumers just like adjusting to card from cash. And they've also shown their ability to create a lot of shareholder value over the long term. So this is a stock that I really like for the future. I wish it was a bit cheaper so I can get in a lot more, but this is one that I was happy to add a share to today. And the last stock that I added today, maybe a more controversial pick, but I picked up some shares of AT&T. AT&T reported earnings last week, and they were not good. Stock went down 10%, then went up 3 or 4% the next day, and then the stock opened today down 3 or 4%, or throughout the day. So when it was down back to the lows of post earnings, I thought, why not? May as well add some shares here. This company is currently paying a 6.1% dividend yield. The company is trading at $17.50 a share, and they're anticipated to do $2.50 of earnings per share this year. So the company is trading right around 7 times earnings. I get that this company may have some issues growing in the long term. They have some secular downtrends on their business. But with that being said, I don't think they're positioned in such a dire spot that they should be trading at a free cash flow yield in the teens. So if you're going to give me that, I'm going to buy it. I'm going to take that 6.1% dividend, and then the other 7-8% of free cash flow off of the price I'm buying. They're going to invest in their business. They're going to pay down debt and better position this company to hopefully slow down that downtrend. Or hell, who knows? Maybe they'll turn it around and start accelerating profit and revenue growth down the road. I just like the risk reward in this stock at such a low price to earnings ratio and getting paid that 6% dividend to wait and see if they're successful in deploying the rest of the capital that they are earning on an annual basis. I know lots of people don't like AT&T, think it's a bad stock, bad company, but at the end of the day, any business that's producing cash flow has a value to it. AT&T is producing, 15 to 20 billion dollars of free cash flow a year. That has value to it. It's just a matter of what multiple you want to put on it. If someone offered you a company for 20 bucks and you're going to make 20 bucks in the year, then you take it. So it's at the end of the day, it's just a matter of what price you pay and what multiple's fair. It's not like it's a company that you shouldn't own and under any circumstances. And I'd say the same thing about any company in the stock market. So those are the 4 stocks that I bought here today. Overall, my portfolio has been doing pretty good, up 16% in my US account, going over to my Canadian account, up about 10% all time. So both of them are up about double digits. Sorry for my cough. I started this account at the end of 2020 for those of you who may be interested. So far, I'm pleased with how the account's gone, especially with, all the stocks over that time period that I don't really mess around with in terms of more speculative stocks, but are down 70, 80, 90%. Really stayed away from those, and lots of my core stocks that pay dividends and have reliable and stable cash flows have just performed well in the more defensive environment that we're in. So hopefully I can continue to accelerate my dividend streams of income from this portfolio and grow the portfolio moving forward. Just wanted to share those 4 stocks that I bought today. Hope you guys enjoyed this video. If you did, be sure to subscribe to my channel, like the video, check my channel out for more content if you like this type of video, and I'll see you guys in the next one. Thanks.